Hey guys, welcome back on the channel. Let's bank on Bitcoin once again because the price is going down, which is a prime moment for us to DCA in, buying the dip, lower our entry price. So I started this series. Everything is on the same playlist, which I added this video on as well. You can go check it out. I started buying Bitcoin and depositing into liquidity pools at over $100,000. It was at around 110. It was past October when I did this. So if we go back 1 year, probably we can see that. So where's October? Yeah, so it was at around this time, mid-October. It was at around 110K per Bitcoin. It doesn't really matter when you buy. The end goal here is to DCA in, lower our entry because it's Bitcoin. In the long run, if I go here to the max chart, I will be taking profits. I don't know when, it can take years, but we will grow our position. So taking a quick glance here at the chart, if you manage even to catch one of these peaks, right? And you think, okay, I lost money because after months, then you are down 50% on your position. Well, it's Bitcoin. It's a prime time for you to bank on it, compound, buy in, lower your entry, because if you keep buying in as the price keeps going down, then your average entry price will not be here at the top. It will be something like this, which makes a whole lot of difference when the price starts going up and you can take profits. So the more you lower your entry, the more you buy the dip, the sooner you will be able to take profits. So one of the biggest issues with this strategy might be when we are using borrowing lending protocols, because here's the whole thing. I'm using liquidity pools, setting a range. When the price drops below my chosen range, I stop earning fees and my whole position is turned into Bitcoin. So if I want to still keep generating passive income, one very easy thing I can do is withdraw the whole liquidity, which is now 100% Bitcoin, go to a borrowing lending protocol, deploy liquidity there, and maybe borrow against it. You don't have to, but you can. With that borrowed capital, you gotta play it safe though. Don't borrow more than 30% because we don't want to get liquidated overnight, of course. That's why I say this is optional. You don't have to do that, but it's extra capital that you can put to work and buying the dip even more. But the crucial aspect here is not to deploy your whole liquidity in one go in your first deposit. Have a plan and through time, go depositing X amount of dollars per week, $100 a week, 100 a month, 1,000 a month. It's up to you. It's an investment that we're doing, right? So one of the biggest downsides of it is when you go out of the range on the downside, you stop earning fees. Your liquidity is still there. Let's say if the price goes back up in the future, the liquidity starts to work once again. The thing is, in the meanwhile, and we don't know how long it will take, we will not generate fees and the money is just there frozen. Let's call it that. It's frozen, it doesn't generate anything. So in my opinion, that is a prime choice to withdraw the whole liquidity in the shape of Bitcoin, because that leaves us exposed to a future upside appreciation of the asset. So right now we're in the trenches, right? Bitcoin dropped below 80K, it's at 75K. The scenario, it's not all that bullish. So let me show you what happened in another video of mine. This is the first time that I deployed liquidity, that I managed to rebalance the position. I took the whole thing out in the shape of Bitcoin. When I started the position, it was worth 20 something dollars. And at this point in time, it's below that because Bitcoin was going down. At this point, Bitcoin was already under 100K. So my 20 something dollars were less than 20. What I did then was use Aave to earn yield on my Bitcoin. You see the APY here. It's very tiny, but it was still earning me Bitcoin on a daily basis. I could then borrow against it as I did. Let me find here the video. So you can borrow USDC or something else using these borrowing lending protocols. And I ended up borrowing $6 against it to open a new LP position with the new range, generating me yield. And I ended up also depositing some more into that liquidity pool because I wanted to buy the dip. The more I'm depositing in, the more I'm buying the dip and lowering my entry price, right? So my Bitcoin back then was 0.302 and now it's more than that. And I also started using another borrowing lending protocol, which is Venus. Let me show you. All right, so here we are at Venus. Let me go on the dashboard and let me show you how I already doubled my Bitcoin. Remember, it was 0.0002 and here in my dashboard I have 3049. That's because the other liquidity pool position that I opened, which I just mentioned, also went out of range on the downside. Whenever that happens, I take my liquidity in the shape of 100% Bitcoin and then I supply that Bitcoin there. The thing is, here on Venus, this is why I changed from Aave to Venus, I'm earning 0.15%, which is 10x, more than 10x what I was earning by supplying BTCB back on Aave. So every time that I go out of range on the downside, I can take my Bitcoin out and I supply it here. Because here's the thing, whenever you borrow against your collateral, you will have a health factor. You see, this is my current health factor. I don't want to get liquidated, so my health right now is very close to 3, which is really good. I tend not to borrow more than 30%, although these will fluctuate depending on the Bitcoin price. So if Bitcoin keeps going down, my borrow limit will start going up. So that gives me a cushion, a leeway that I can work with. Remember what I told you before, we don't want to get liquidated overnight. So the cool thing about it is that this money that I borrow, I open a new liquidity pool position with it. That liquidity pool position needs to have an APR that allows me to pay for this borrowed amount. Since this is borrowed money, I still need to pay debt and pay interest. So make sure that your LP position, I can show you my LP position that I opened. Make sure that the APR it's generating is more than enough for you to pay the interest for the borrowed tokens that you're taking. So this is my new position. The APR is 55%. It can be higher, it can be lower. Yesterday it was at around 20%. It depends on the markets pretty much. My minimum is at 70K, maximum 100K. It's wide enough that I don't have to bother by managing every single day. I just come here once a week, couple times a week. That's pretty much it. I did also use some of that USDC to open this position, and then I deposited some more. I also need to deposit more because I try to keep this at around $20, if not more. It pretty much depends. Whenever I'm buying the dip, which can happen on a weekly basis, on a daily basis, it's mostly depending on your strategy. But I always try to deposit some more into the pool because this is where the real money is being made. At some point, I hope to have this liquidity being worth hundreds, if not thousands of dollars, compounding, generating something meaningful, or at least the pool needs to have an APR which is the same, but preferably higher than the interest that this borrowed position will accumulate over time. Okay, so that's a key thing there. Make sure that your liquidity pool is earning you more than you need to pay in interest. That's a crucial step there, but it's not hard. Look at this. I'm talking 55% APR with this minimum and maximum price range. So it's not hard. Liquidity pools are extremely profitable. And this is a way that you can bank on Bitcoin using the power of DeFi to get exposure to liquidity pools, and also using those borrowing lending protocols to not leave your money idle. Another of the cool things about it is that you get to buy the dip and still finance yourself using Bitcoin, which is the strongest cryptocurrency, so why not? And look at this, in a matter of a couple of days, I did this last Sunday or something, in a matter of a couple of days, $15, not even that, earned me 3 cents in fees. Traditional finance doesn't even come close to this. And when the price of Bitcoin starts going up, what's going to happen is that, let me go here on the dashboard, my whole supply of Bitcoin, instead of being worth 36, it will be worth 40, 50, if not more, because if the price keeps going down, I keep withdrawing liquidity from the pool, depositing here, which automatically increases my health factor. My health factor, just by doing that, will increase because I'm supplying more. If Bitcoin price starts to go up, that is when I take profits from the pool to repay the debt. All right, so in a nutshell, that's it. Let me also show you in the deck screener chart how the range looks right now. All right, so this is it. The orange lines are my current range and the green lines were my previous range. So the reason why I also have my downside here at 70K, it's because I'm not really sure where Bitcoin is going to go. I don't know if it will keep going down or if at some point it will start chopping sideways or go up. So I just looked at these past times here in the chart to see, okay, at around 75K, there's a support here back in April of 2025. I gave it a bit more leeway down. I set the downside to 70K. So let's see where it goes. If it drops below this, probably we will enter this price range. So let's see, what are we talking about here? Something like this, from 50K up to 75K. This can happen, but look at this. It means that Bitcoin traded for a substantial part of the year, 256 days, trading in a 50% range. This is really good when it comes to generating fees, because right now I'm earning at around 50% APR on the pool, and I'm using a 43% range, give it or take. So if I manage to stay for over 200 days in a range like that, even if it's chopping sideways, I probably will work with APR for the pool that might not be 50%, but probably 20%, which is already good enough for me. As time goes by, I'm not only claiming fees here or generating fees that I can compound, I can also keep growing my Bitcoin bag, my liquidity. All right, guys, these are the essentials of this Banking on Bitcoin series. I started it back when Bitcoin was at 110K, just because I know many people going to crypto, they FOMO in when the prices are hot, they're at all-time highs, everyone is talking about it, and then they panic when the price drops 10%, 20, 30%. And they sell all their Bitcoin. The crypto bros use them as exit liquidity, but there's another thing which is very important, guys. The crypto bros right now, they're no longer the whales in the space. Since the Bitcoin ETFs were released, right now it's BlackRock. BlackRock is running the markets, okay? It doesn't really matter though, because as long as you don't sell your Bitcoin and you look at it as a long-term form of investment, I think we're good. I think we're good. And that's about it, guys. This is my quick update on what I'm doing with this Bitcoin position, just to show you that I started at very close to all-time high, but I'm not panicking. I'm not selling. Actually, I'm growing my bag, and this whole strategy is very simple. Anyone can do this. If you want to know more about it, go check the whole playlist. I go in much more detail in other videos. So if you have any questions, drop a comment. I hope this helps. I'm going to wrap this one up. Thank you for watching. Take care. Keep exploring crypto. Go bank on Bitcoin, and I'll see you on the next one.